Welcome to another edition of Brian's Big Idea. And my big idea is a little different this time. And I don't want to preface too much, so I want to talk about three stocks and then one of our great services here at Zacks. And let's get right into it. I think we got a little interesting play coming up here. All right, it's Chewy. And Chewy, I did a rank buy video on the other week, just in front of the big news for Chewy. It says Zacks ranked number one, strong buy, A for growth, F for value. That's why I chose that one. But it was going to the dogs. I was doing Chewy and Datadog, if I remember right. So Chewy makes consumer product staples. It's dog food. It's pet stuff. Okay. And it's an $11 billion company. And it's very liquid, and they posted a good number, and the stock ran up, not because of my video. Let's not pretend like I moved the market, especially something that big. But Roaring Kitty from GameStop fame posted a dog, and the stock soared higher. But since then, boy, oh boy, if you chased the Chewy, you're in for it. So why does Roaring Kitty like this? Well, who knows why Roaring Kitty picks anything? But he does have a handle on Reddit, and it's called Deep Expletive Value. I'm not going to say that because this is a family show. 26 times forward earnings. That's pretty expensive for a 3% top line growth. I mean, it's a stable business, but here is where the discrepancy is. 17 times forward book. Value investors want to see the price to book very low. 3 times is usually their maximum. You would want a price to book to be very low if you're looking for deep value. That means you're getting in when everyone else has gotten out and you still believe there's hope in the business. Not really going on here. Okay, so margins have improved, but that is that's my story on Chewy. Yeah. Deep value guy is not catching any real value here. None that I can see. Maybe he knows something that I don't. Who knows? But he's got a lot more money than me. Let's just say that. Does that make him smarter than me? Well, basically everyone's smarter than me, but he's got a lot more money than me. All right, so now our next one we're going to go to is MTech Systems, and it's ASYS. So Zacks ranked number 2, A for growth, C for value, different industry altogether, semiconductors, it's tech. It is a micro cap, really small guy, $87 million market cap. That is very small in comparison to the $11 billion for Chewy. But let's take a look at why I pulled this one up. I pulled it up because its price to book is right at 1. That means that is a value play. Of course, top line has contracted significantly. Normally, when you have a deep contraction in top line sales right there, you're going to have people running for the exits. And that might bring it all the way down to a book value down there. We can see margins really not looking good there. All right. Finally, we're going to talk about Clear, Secure. And that's you. YOU is the ticker. I love words as the tickers. Zacks ranked number 1, strong by A for growth, D for value. D. All right, so $2.7 billion pays a little bit of a divvy, so you get that. And we got a nice smile on the stock price. So they have the security system stuff, airports and secure IDs and things like that. All right, we're talking about you here, and not you personally, talking about the ticker. A 17 times forward earnings multiple. Big time growth. People pay up for growth, and that gives us a 10 times price to book. So value investors aren't going to be so concerned about this. Growth investors are going to like that big number, and, growing your revenue by a big amount and then growing your margins by a big amount is going to turn to big earnings, and that's going to draw this number up even higher. So good multiple expansion, will come with operating margin leverage, and they're getting that. So that's the story there. So now, why did I talk about all three of those things? They're in different industries. It's all different. It's price to book, it's valuation, that sort of thing. Well, one of our great services here at Zacks is the ETF investor. This kind of takes a lot of that out of the game here, because what you're doing, you're buying a whole sector, and sometimes there's good value in a sector. Sometimes there's stocks that are not so good value, but this kind of takes a lot of the emotion out, takes a lot of the earnings things out of there, and helps with your diversification and exposure. So if you follow Roaring Kitty into Chewy, you might get smoked here. If you follow Brian into MTech Systems, you might get smoked there, or it might be great. Who knows? But these, Nina buys and holds. So this is Nina. Nina Mishra, she's a professional. She's been doing this for a long time. She has got great ideas all the time. She gives you a nightly recap about what's going on in the portfolio around the markets. But you can see she buys and holds a whole bunch of these things and, lets the market do its thing. You can see that she's held the semiconductor here for a very long time, 2016, 2017, and then you're going to have these big time green numbers. I mean, who wouldn't want to have multiple 100% winners in your portfolio, 561%? But she did that without, any of that risk. I mean, there was some risk to a degree, but not that single stock risk and other things that come along with that. So ETF Investor, make sure you check it out. All right, that's it for this week. Be sure to join me next week when I have another big idea. And until then, why don't you go to Zacks.com/promo to check out all of our latest promotions.